that banks are built for the physical distribution of paper in a localized network focused upon buildings and humans, and very rapidly we're moving into a new structure of the digital distribution of data through a globalized network focused on software and servers, and banks need to radically change their business model.
I'm Kenneth Amaduri, and I'm joined today with Chris Skinner, and he's known as an independent commentator on the financial markets and fintech through his blog, the Chris Skinner blog, and it's at Financer.com, and we're going to have the link in the description area. He's an author of the best-selling book Digital Bank, and he's got a new book out, the sequel, Value Web. I have a copy of this in my hands, and for sure you'll be able to get that if you visit his website. And we'll have, again, that in the description area. So we're going to pick Chris's brain today, talk about the financial markets a little bit and what he sees going forward with internet technology. So Chris, thanks for coming on the show with me today.
Hey, great to be here, Kenneth, and thanks for inviting me.
Let's start off with this. You've covered the banking industry to a large degree in your books and writing. And with the world getting relevered since the 2008 crisis, do you see another banking crisis on the horizon potentially?
Maybe a bank crisis due to the fact that they are not incorporating technology efficiently or effectively. And in the last decade, we've seen a huge range of new competitors rising with billions of dollars of investment, over $100 billion just in the last 4 years alone, in new fintech companies, financial technology companies, to really squeeze margins of banks and to nibble away at where the banks are inefficient. And to a large extent,
What is your opinion on the Glass-Steagall, and what do you see as the impact on the banking industry, and I guess more so the average person, the economy?
Yeah, I mean, if you look back at why the Glass-Steagall Act was repealed, it was really under Sandy Weil's a integrated Citigroup between insurance, brokerage and banking. But it led to a lot of unintended consequences when Gramm-Leach-Bliley came in and Glass-Steagall was repealed. It really created that casino capitalism that not work, because the destabilizing impact on JP Morgan, Wells, Bank of America, Citigroup, it would be
I'd like to get your thoughts on the markets in general. It just seems, looking at where we're at record high valuations and stocks now, and I think a lot of us are confused why precious metals aren't what they would be doing. But we do have another
You always know that you're going through a boom-bust cycle. I mean, the markets are always going through a boom-bust cycle, dating back to that traces the Dutch tulip boom bust cycle and the others around the 18th century that were taking place. It's the extraordinary madness of crowds. We all follow each other into investments, and then we all panic and leave those investments when they start to go bad. Increased in value by 50%. That does not make sense long term. And what you and Ether and Zcash and the other digital currencies that are emerging out there, but just don't hold them because they're not going to keep their value long term. If you want to be secure and more confident, then
let's talk about cryptocurrencies and your opinion.
Well, there's a fundamental challenge, and it's something that I delved quite deeply into in ValueWeb, which is that we need an internet of value to support the for physical operations that are slow and expensive, like check processing. They're not designed for streaming and downloading movies or for your fridge ordering groceries. So the internet of value is being built right now by these financial technology firms, and a core part of what they're building is based around digital currency exchange and aggregated wallets like the Apple Pay wallet or Samsung Pay or Android Pay, whichever one you use. And the banks are kind of challenged in this context in the retail world because they just have no design to support those operations. I mean, I was blogging the other day about something I picked up in Reuters, which is that 43% of the main systems running the main banking operations of US banks are written in COBOL, and the problem maintain the systems anymore. That's not really a great design for the Internet of Things, is it?
Wow. Well, you know, what do you see as the value web then? What is the web going to continue to change our lives? There's people that are living today that are, 20 years old, under 20, that have no idea what the world is like without the internet. And even within their lifetime, it's just changed so dramatically. Now people are walking around with the internet on their phones. And it's just such an integral part of who we are today. And if you even look at information, the cost of information has collapsed because of the internet. And I mean, it brings up a whole nother topic. Traditional education is through the roof at record levels, which is a complete free market discrepancy. But, what is your thoughts in general on what's going on with the internet and how it's going to impact the world?
Yeah, I mean, I'm working on a new book. The theme is Digital Human. Kind of takes the digital bank concept and widens it to where are we going over the next 10 or 15 years. And to a large extent, the conclusion is, particularly in the financial context, that we're moving to a marketplace of apps, APIs, and analytics, where banks will become curators of these services and build them into the best experience that you can possibly get in terms of financial advice, financial support, predictive and proactive services, and knowledge analytics of your digital footprint to make sure that you're spending and saving smarter. And I liken it to how we've seen the car manufacturing industry change from one where Ford and General Motors used to build all of the components of the car, assemble them, service them, distribute them, to now they just really are sourcing components globally from specialist manufacturers into different form factors. And that's why the vehicle ranges of the Fords and the General Motors are much bigger and wider than they ever were, including very soon self-driving cars. And that's what banks are going to become. That rather than being these integrated monolith structures, they'll be assembling and curating a whole range of apps, APIs, and analytics for their customers. Now, from your specific question around where does it take us as individuals is into what I call the semantic web with a semantic bank. So the semantic web is a term that said that the internet kind of becomes intelligent. It uses artificial intelligence and really surround our lives with information and support and advice and service. And financially, that's what the semantic bank will be doing. But the internet generally is going to become completely immersive. In a similar way to we saw in the film Her with Joaquin Phoenix and Scarlett Johansson, where the tagline of the film is, it's not an operating system, it's a consciousness. That's pretty much almost where we are today.
Wow. Yeah, it really is amazing what's happening. I mean, I've heard stories now, and we're already seeing it to a certain degree, where the internet's just going to be in every single aspect of our life. It's going to be in our shoe and predicting when we need new shoes, and in our refrigerators, predicting when we need milk and sending us coupons, and just knowing where we are and knowing what we need, and really all in an effort to track our patterns. And some of the technology that can weigh out there a little bit, but
you never know the life science.
So hopefully they do figure out a way to do that down the line here, and I guess we'll have a population problem to a larger degree. So hey,
we'll
Chris,
be living on Mars.
We'll be living on Mars, yeah. Hey, Chris, let's get your closing thoughts here. What was the of what you were wanting to share and the advice that you're giving people?
Yeah, I mean, the digital bank book that came out before ValueWeb was all about the fact that banks are built for the physical distribution of paper in a localized network focused upon buildings and humans, and very rapidly we're moving into a new structure of the digital distribution of data through a globalized network focused on software and servers, and banks need to radically change their business model. ValueWeb builds on that and says that if Digital Bank told you what the business model you need to move to is, ValueWeb is telling the banks why they need to do this quickly, because there's a whole new structure appearing of specialist companies focused on niche areas like Stripe with their API that are building a new internet-based financial system, which if they're left to do without some collaboration and focus upon by the financial community, they might build it without any involvement of the existing financial system, which would be quite a radical change. It's not going to happen, if I'm honest, because most of the banks I deal with have woken up to this. And at the end of it, it's really the bottom line for me is the challenge we have is that banks, like fintech companies, these financial technology startups, banks are also fintechs. They run on technology, but they're run by bankers in terms of the people at the leadership team of those institutions. Only 4% of bank leadership teams have anybody who's got a professional technology background, which means that the majority of the leadership teams in banks have no vision about how to use or implement these new technology structures. And they should be far more balanced to have the right leadership with the right passion and the right culture to effect technological change. And that's what ValueWeb is really pushing on, saying you've got to get technology leadership into the financial institutions as well as financial leadership.
Well, I'm looking at Bitcoin right now just before we end the interview. Bitstamp has it at $1,580 at the moment, and it's not stopping. I think we're definitely in a little bit of a bubble phase here. Who knows how long this is going to go, but it sure has piqued my interest over the last while, actually. Chris,
cashing on the volatility.
Cashing on the volatility. Well, hey, I'm hoping it goes to 50,000 one of these days. I didn't put that much in it that I'm so worried about losing. But you know what? You never know. We could see some major moves into it if we see some disruptions in our financial system. And it's only got a $20 billion market cap. It's higher now with the price moving up, but the smallest amount of money going into it, which we're seeing in large-scale adoption of it, can continue to send it higher. Nobody thought it would go as high as it did. So I'm optimistic of Bitcoin here. Would you like to respond?
Let's have them valued at $1 million by the end of the next decade. And a lot of people are saying they'll be valued at even more than that.
Hey, you know what? I would be very happy if that...
Union model, because you can transfer within minutes thousands of dollars to the Philippines, for example, and the cost is 0.1%. It's radically changing the world.
Oh yeah, no, and I love it. I love it. All right, Chris. Well, hey, I appreciate your time on the show, and I appreciate your expertise. We'll be sure to have the description of your book and also the link to your book in our description area. So thanks for coming on the show with me.